Welcome back after lunch. I'm Stu, I'm the CISO at Trustpilot. This is my first talk in a year, so I'm delighted to be back speaking at events. It's the catchily titled, I spent 2 years down the crypto security rabbit hole so that you don't have to. So I'm going to talk a bit today about crypto security and some of the wild goings on. This is an amazing event, Scot-Secure. I've done the Edinburgh one numerous times, so it's lovely to see it sort of expand out. Some disclaimers, if you've seen me before, I like memes. I don't really take myself too seriously. This is meant to be fun and information sharing, so we'll have a bit of a giggle about some of the things that go on. I don't consider myself an expert or a thought leader, but I chuck myself in the deep end of some things and I've learned some stuff along the way. Not to get the tiny violins out, I went half deaf about a year ago and I've got no hearing aids in at the moment, so I'm probably shouting very loud, which is fine because you can all hear me. When I come to do a Q&A at the end, I'll have to put hearing aids back in. Apologies, like I might have to come close to you to hear you. This is the first time I'm testing this stuff out, so I apologize in advance. The joys of a mad genetic hearing loss. I played drums and guitars for 20 years and didn't lose my hearing, and then genetics has played its part. Anyway, let's move on from that. Needless to say, right, this is a talk about crypto and the mad goings on in crypto and DeFi. I am not a financial advisor, and this is not financial advice. If you decide to dabble in crypto or DeFi, that's your choice. Hopefully this is some good advice for you to help navigate your way through the minefield that is crypto. Just as a show of hands, if anybody's willing to, is anybody dabbling in crypto, investing in crypto? Okay, interesting. Probably a few more than I maybe thought. Okay. I'm going to try and cram in this in 20 minutes as much as I can. Frankly, I could do this for an hour. There's so much crazy shit that goes on in crypto. So some of the scams that occur, some of the hacking that goes on in crypto, just a little section on nefarious characters, and then a brief kind of sum up at the end. Can everyone hear me okay, by the way, because I feel like I'm shouting very loud. Let me start by saying I've spent about 3 years in crypto as an investor and also dabbling in the security side of things. But it's not financial advice. I personally believe that it will be the way that we transact and it will disrupt financial markets, but that's my personal opinion and it's not one that I expect everyone to share. There's literally thousands of coins these days, right? There's everything from Bitcoin and Ethereum, which are very well established, safe investments, through to the plethora of shit coins, as we call them. Now, you can't buy shit coins on standard exchanges. There's a particular way to go about buying those. And that's where a lot of the criminality and scams happen. Obviously, these things are particularly volatile, not financial advice, but risky investment. So those shit coins, as we call them, that's where most of these scams happen because hundreds of these things are released every day into the wild. The most popular tactic is called a rug pull. For those of you that dabble in crypto, you may have been a victim of this or you've perhaps seen it in action. What happens when a token is created is you have to add liquidity into that token for it to be bought and sold. So the creator of that token will add in generally $1,000 to $2,000 as liquidity, which means you can start to buy it and trade it. Once you buy it, the price goes up, everybody gets excited by it, and the liquidity rises. But a rug pull is essentially when the liquidity has not been locked, and the creator of that token can just pull the money out in one simple transaction. It's probably the biggest red flag in a token launch that you'll see is where the liquidity is locked, which it can be locked by a third party, which means the creator can't do anything with it. That's a good sign of a good solid kind of project. So we're going to look at an example. I've managed to beep the swearing in this, just so not to offend anybody. What you're going to see here is a crypto bro, right? Can I use that term? I'm 42, right? But a crypto bro monitoring a shitcoin called Squid Game, and he's watching the market cap go up. Everyone's excited. This is during the bull run. Just a small thing. This is during the bull run, so there's lots of money going into crypto, lots of new people, everyone getting excited, watching that coin go up. And then, watch as this liquidity gets pulled in real time.
Amount of coins that are locked, staked, whatever the going on, that would be the fully. But obviously the real one is not. So the market cap is $2.168 trillion. And now the market, it went to zero. And damn, there we go. Squid Games. Sayonara, mother. Oh, good Lord. Holy. You seen it live, baby. You seen it live. A goddamn rock pool, baby. Shee! A live rocking. Wow. Wow. Holy moly, man. That is a live rug pool. What the happened here? What happened here, dude?
So that's that liquidity getting pulled, probably hundreds of thousands of dollars, which means all of the investors in that token are screwed. That money's gone. There's no way of selling the token anymore. Money's disappeared into the ether. What I find surprising in general about this is every transaction is on the blockchain. You can trace these transactions. You can't necessarily trace them to an individual, but you can follow all the patterns and trace everything. It's a public thing, right? And at some point, those people have to turn it into real money via an exchange. And again, that's traceable. So I always wonder how
Somebody's asking a question.
Sorry, I'm going to really struggle to hear you without hearing aids in.
Where does that money go?
So that will be pulled via a transaction into the wallet of the creator. So the creator will have their own wallet.
So the creator puts $1,000 in, hypes it up, people buy it.
Yeah.
Real money is put in.
Yes, so they've bought Ethereum, and then using that Ethereum, they've bought this token. So they've went from real money through an exchange, maybe Coinbase or Binance. So real money from their bank account, and then bought crypto with that. And then that liquidity's been pulled, so they can't sell that token and then turn it back into real money. And that's gone.
Has taken the real
all of that money that's been generated has gone into the scamster's wallet, which again is traceable, right? You can see the transactions, you can see the wallet it goes into, but yeah, it's gone. So again, sorry for not hearing you. It's an interesting experience for me to present again. So tokens are created via code, okay? They're called smart contracts. It's written in Solidity, generally, and Viper. I don't know if there's anybody in the room who codes in those languages. I don't. And they're a scamster's dream, to be honest. There's all sorts of suspicious coding techniques to rob you of your money. And there's hundreds of these scams a day across the different blockchains. So one of the main ones is called a hidden mint function. So the idea that there's a piece of code within the smart contract where the creator can mint their own tokens and then sell those tokens. Yeah, they mint their own tokens and then sell them. It drops the price. You lose money. You panic, you sell. Meanwhile, this person is generating a whole load of cash. But what they've got very clever at doing is hiding them in libraries and things. So even if you can read code and read Solidity, they're now hiding them in these mechanisms. So on first glance, as you read the smart contract, you can't actually see the scam. So they're getting much smarter in terms of how they do that. And let's face it, how many percentage of people can actually read code to that level to know that it's a scam? Second one, blacklisting wallets. Again, this is all written within the smart contract itself, where the creator of the token can decide essentially who buys and sells it. So whitelist and blacklist wallet addresses. What they tend to do is allow you to buy the token quite freely, so it's open to everybody. And then once it's generated a lot of money, is they'll change the contract and only have a whitelist of maybe 2 or 3 addresses that they own that can be sold into. Again, you're left with this sum of money. You think you've made loads of money. Oh, fantastic, my investment's gone up 10x. But you can't actually sell it because they've blacklisted every other address. Yeah, they often wait until a certain market cap before they do that. So you think it's legit, you think you're making loads of money, and then bang, you're knackered. Sorry, this thing's not working very well. This is quite standard in crypto projects where they'll allocate a tax fee in a buying and selling of a token. Now that's legitimate in a lot of projects because you've got teams to pay, you've got marketing, you've got sort of product development, and that's a way for them to set a fee on a transaction to make money as a company, as a startup. But what some of the scamsters do is after you've bought it, they change the sell tax to 99%. So they'll let you sell the token, but then they'll keep 99% of the profit. So again, you think you've made all this money, but the actual amount that comes back to your wallet is 1% of what you think it is. So they get rich, we get knackered. There's fairly standard security risk within crypto. Don't know if you can see this. This is a phishing attempt on my Twitter account. Just put the word crypto in a tweet and you will get all of this garbage coming towards you on your account. Standard stuff, right? Hey, come and get this offer via this link. What that's doing there is it's trying to open my Phantom Chrome extension, which is a wallet, to drain my wallet. Twitter's absolutely rife, or X, sorry, as it is now, sorry. It's absolutely rife with this, unfortunately. Bots are also very prevalent in crypto. There's two types. Sniper bots, which will buy a whole load of tokens before you get the chance to buy them. So as soon as the token's released.
On the cyberbot thing, that's actually the most common, legitimate way to do it now, where teams will have clean contracts and seem above board, and then they'll snipe their own token on the block they know it's going to launch on. And it looks all great, and then they play the victim,
Good projects can protect against it by blacklisting accounts, by they'll set a high buying tax to start with, or selling tax sometimes to avoid the snipers doing their thing. But it means they get in before you, they buy all the token, price goes up, you buy up here, and then they sell, and then suddenly your investment's halved in price. I'm not really selling crypto very much here, am I, in terms of adoption? And then the other types are called MEV bots, and they front-run your transaction. Quite a hard, difficult thing to explain. They buy for a better price, they get in ahead of you, then you buy, pumps the price, and they get the difference. But they do it thousands of times a day, and they can make millions. Again, you lose out as a customer. How am I doing for time? Yeah, cool. Major hacks. I could literally spend all day on major hacks in crypto. There is a site called rekt.news, rekt.news, which has every major crypto hack, and there's pretty much one every day, give or take. Sometimes they have the weekend off. And these are not trivial hacks. These are millions of dollars, sometimes hundreds of millions of dollars, that largely goes unnoticed in the general tech world because it's just crypto, right? It's volatile, that's what happens. But it's absolutely frightening because these are proper projects. These are proper startup companies transacting huge amounts of money. One of the main hacks is called a flash loan attack. I'm not even going to try and explain it because, frankly, it's beyond my technical expertise. You can be loaned crypto and sell it all in one quick transaction, but scamsters can manipulate the price during that. So borrow the token, manipulate the price, sell back to the lender, and they take the profit. Again, 197 million, sorry, wrong one. 197 lost from Euler Finance using that technique. Imagine if that was your company losing 197 million. You'd be on BBC News, you'd be all over the press. Probably a problem that we've all had in security. Private keys and the loss of private keys happens a huge amount. I'm just reading some stats here. In the last 12 months, there were 23 incidents for a recorded $905 million of loss through compromised credentials. This is a VC, Bo Shen, of a big crypto company. He was socially engineered to give away his keys to his wallets. He lost $42 million. That's a bad day at the office, right? Harmony lost about 200 million. Ronin, I think, was the biggest one in crypto history. 624 million was lost via key compromise in that hack. The interesting thing about the Ronin one is, let me just make sure I've got the right info. Or was it Harmony? No, wrong one. I'll come back to another one that's got some interesting information at the back of it. Right, nefarious characters. I'll have to read this out. I make no statement about the guilt or innocence of any of these people unless already convicted in a court of law. I merely comment on already public info. Just putting that out there as I explain who some of these people are, because they are yet to be put to trial. Don't know if you know these two wonderful individuals. This is Sam and Caroline, and they and their friends ran an exchange called FTX in America, which was an exchange of which celebrities invested in FTX. Tom Brady and Taylor Swift and all sorts of very wealthy people invested in FTX. It crashed. It crashed at the end of last year, and it brought down the crypto market in a spectacular way. But their cybersecurity was hilariously bad. This is a quote from the filing. In fact, sorry, I'm going to jump to this one. FTX looked after literally tens of billions of dollars. Sure, this isn't a difficult question to answer. How many cybersecurity staff do you think they had? Yeah. Big fat zero, right? This is the quote from the finding that went through the SEC and the court and court side of things in America. The FTX group had no independent chief information security officer, no employee with appropriate training or experience tasked with filling the responsibilities of such a role, and no established processes for assessing cyber risk, implementing security controls, or responding to cyber incidents in real time. As with critical controls in other areas, the FTX group grossly deprioritized and ignored cybersecurity controls, a remarkable fact given that, in essence, the FTX group's entire business, its assets, infrastructure, and intellectual property consisted of computer code and technology. And they had nobody working on cybersecurity. The person who oversaw the aftermath of FTX was a guy called John Ray III. He oversaw Enron's liquidation. So here's a person who has seen the collapse of one of the biggest companies of all time. And a quote from him: "Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here." The company did not have an accurate list of its own bank accounts or even a complete record of the people who worked for them. He added that FTX used an unsecured group email account to manage the security keys for its digital assets. Another totally idiotic thing FTX peeps did is keep their client-sensitive cryptographic keys and seed phrases stored in plain text documents in AWS that everybody had access to. So almost everybody in the business could go in and get those keys and siphon off whatever money they wanted. They also used no MFA across their estate. And these are, the supposed smartest tech people on the planet. So absolutely frightening. So as a whistle-stop tour, what can I teach you in terms of learnings? You have way more control in crypto than you would through your bank. You can move money about without anybody seeing it. There's very little control in terms of how, or governance or whatever, right? You can just move money from wallet to wallet in the click of a button. Now, inherently, to me, that has some amazing positives as we move forward in tech, but it introduces a hell of a lot more risk for us all as individuals. Smart contracts are very difficult to understand, even if you code, and it's difficult to know what to trust. My advice would be try and read up on some of these techniques that I've gone through today if you want to dabble. Again, I'm trying to be careful about financial advice here, but try and read up on the security aspects of these things so that you're informed about what you're getting into. There's a phrase in crypto called "not your keys, not your Bitcoin," or "not your coin." If you put your investments into an exchange, you no longer technically own those keys. So if they collapse, it's gone. If you move your keys to a hard wallet, cold storage, they're yours forever. Nobody can touch those. So to wrap up, It's a picture of the Wild West. I think crypto and DeFi is going to be the future of the financial markets eventually, but it's absolutely rife with bad actors. It's as crazy a thing as I've ever seen. That's what part of me wishes I didn't really get that deep into it. And this is only a fraction of what I've found. I'm going to do a 60-minute version of this talk. And even some of the most experienced crypto people have been scammed. I've been scammed. Unfortunately, that's how it is. Look, I'm really happy to take Q&A. I have to put these things back in my ear, and then I might have to move closer to you, so bear with me. It's been an interesting experience to go deaf at 42. So I'm happy to take any questions. There's a mic, I think, at the back. What I'll do is I'll repeat the question, because I've got a live stream going on. So yeah, if you could shout. In fact, you don't actually have to shout, because these things are mad. Honestly, I can hear my own voice at about 100 decibels more than it normally is. Any questions?
I mean, obviously, if the people are stealing the money from the wallet, or the people's wallets, if they're stealing money from people's wallets, what's then happening? Like, is there any standards being put in place for that? Do they get, like, penalties for that? Or is it just, like, they're gone?
I just need to repeat that for the live stream. Oh, yeah, of course it is. Yeah, so you're asking that once that money's gone, what happens?
Yeah.
At the moment, essentially very little. I think I missed a bit out on one of those hacks, which was the Lazarus group, the North Korean group. Go and read on Jeff White's book on that. It's amazing. So some of the huge scamster groups are obviously being tracked by the normal, FBI, CIA, whoever. But in terms of the low-level shitcoin stuff, it's gone. I mean, nobody, it happens so frequently. There's so much of it.
You couldn't be able to do it because it's such a high quantity.
I guess you could go to the police and, but again, the volume of this happening is so vast. I'm not sure anything could be done. There's an element of the positive side of blockchain is that you can be anonymous, right? So the idea is that somebody doesn't have to know who you are. But that has a downside to it because you can't then trace it back to a person to then, have them. Yeah, there's quite a few people in the industry, people like myself or security people, trying to form alliances and things to basically not go after these people, but generate more knowledge, kind of out them to a certain extent if they're known because they talk in certain forums sometimes or they share certain information. So there's a bit of that going on where this sort of good guy, bad guy type thing. But yeah, unfortunately, once it's gone, in terms of getting it back, it's gone.
It's gone.
Yeah, you can't. And that's inherently, you go to your bank, right, and you've been scammed out of some money, or your card's been skimmed or something. Your bank will generally sort that for you, and that's what the trust you have with that organization. In crypto, it's gone, unfortunately. Sorry, there's two people fighting over the mic.
That's all right. I dabbled like yourself through the pandemic in DeFi. And I come from a background of psychology and human behavior, and something I noticed that was prevalent in its kind of anything goes environment, as you pointed out, is that it's a race to the bottom. And if you don't keep up with the tools that bad actors are using, you might as well just hand your money out on the street. You seem positive about DeFi long term, so I put it to you with that, what I just said in mind. What must change or evolve within DeFi for it to be even a viable route for people? Because although FTX was front page news in sort of mainstream, there was also within DeFi a coin called Luna and Terra.
Yeah.
Just as I was kind of exiting crypto and I got out for once in my life at a good time. But that was, again, tens of billions of dollars lost, and I think a lot of people haven't returned to crypto because that was such a seemingly legitimate project in South Korea with a founder who was pally with Samsung and you name it, and it just seemed like, well, if it can happen to them, it can happen to any project. So, as I say, do you see a kind of a logical path for DeFi to evolve into being something more legitimate? Because it seems to me as if it brings out a lot of the worst behaviours human being.
Yeah.
As
So
it stands.
just for the stream, that was around the future of DeFi and how it can move into a more trusted thing, right? Because it's, you know, it's so prevalent with scams. I mean, first off, right, I've never seen criminality move this fast. I mean, cool. I was 16, 17 when the sort of internet first really kicked in as a thing, and remember that just being rife with criminality as a new technology. This feels very similar in that the people who seem to weaponize it very quickly are those groups, and they get very clever at doing it, and they drag the ordinary person sort of into that world. I don't have a brilliantly coherent answer yet on what the future holds. There's a lot of chat about regulation. Should it be a regulated industry by the government of wherever, or, you know, some kind of global regulation? I battle with that idea because the idea of DeFi is a deregulated, decentralized system, of which I think there might be a lot of power in that as we grow in technology. The reality is it's got to be somewhere in the middle, right? You've got to find ways to stop that criminality happening, of which you'll have limited success to a certain extent. You've got to make it viable for people to want to invest money and invest in projects and teams. But we're on the very, very early adoption of some of that, of which you get all this nonsense.
I liken it almost to like the pre-seatbelt era of cars.
Yeah.
Because there was that, that was about 30 years long, that period, last century. Now there's not much, and quite with good reason, obviously, not much that the law won't impose on your car driving ability, you know, whether it's using a phone or, you know. I don't see it that differently to things like ChatGPT at the moment, you know, the buzzword of the day, where everybody adopts something so quickly without us even looking at the risks to it. We just adopt it, this new technology. Well, who are the people that tend to go after that new technology? They're the criminals, they're the people who leverage it for what they want to do. And they actually tend to be one step ahead, don't they? That's how it works, cat and mouse.
Like ChatGPT and AI and stuff, how far away do you think we are from ChatGPT and AI like predicting the stock market and saying, right, this is when to sell, this is when to... Have you already got that? Or?
You can already do it. Not that something that I would share on Twitter, but you can ask ChatGPT, because I've done it, to build you a strategy of when to buy and sell based on previous history of a token. That's already possible. And you can use a thing called TradingView, which is the kind of general online SaaS platform for watching tokens. And you can then try and predict. It's not going to be perfect, but you can set it to a percentage hit rate based on the previous, you know, time frame, and it will give you the buy and sell points and things. That's already happening.
How accurate is it? Is it as good as humans or better?
I mean, I haven't really used it in anger, but yeah, I mean, I guess it's taking away that need for you to make a decision about it. It's just black and white. It's just using data. Yeah, that's a whole different talk about ChatGPT and a lot of the risks that are attached with that as a technology. Yeah. Sorry, I'll come back to you, all right? Sorry, I have to come close to you.
No, sure. I'm just wondering, so you're saying about how one of the aspects with crypto is that it's anonymous, and that you can just move money around and there's no thingy. Do you not think that that's essentially not a bad thing, but it is a bad thing for a lot of people? Because one of the reasons that we track the movement of money is to watch criminals who are paying for things they shouldn't be paying for. Do you think there could be a way to do that with crypto without fully removing the anonymity?
Yeah. So the question was around having anonymity by moving money around wallets is obviously a dangerous thing. I think absolutely. What's difficult is with every new technology or new process that's brought out, it's going to be weaponized by a small amount of people. The reality is having the option to move your money around as you wish without a bank having the control that they have over at the moment is a powerful thing. But it's so new and it's so disruptive that it's being weaponized by the people who money launder, you know, all sorts of horrible things. So I mean, I don't yet have brilliant, coherent answers to how to solve that, right? With all new technologies and all new disruptions into technologies, it's very painful to start with. I think it will be adopted as a thing. Your banks are already using blockchain technologies and moving into some of these realms.
They're not using it to that level of commercial awareness, are they?
In terms of how they leverage blockchain.
They're not using it for blockchain. They're using blockchain technology, but they're not using the Bitcoin aspect of it.
Yeah, I don't know. I'm not on the inner workings of a bank. Just very quickly, because I think we've got time for one more. I think there was. Am I done? All right.
Yeah, that's fine.
Are you sure?
Yeah, that's fine.
All right, cool. Listen, thank you so much. I really enjoyed that. Thank you.